Petróleos Mexicanos, which translates to Mexican Petroleums, is the Mexican state-owned petroleum company, created in 1938 by nationalized petroleum and the expropriation of all private, foreign, and domestic companies at the time. Pemex has a total asset worth of $415.75 billion, and is the world's second-largest non-publicly listed company by total market value, and Latin America's second-largest enterprise by annual revenue as of 2009, surpassed only by Petrobras. The majority of its shares are not listed publicly and are under control of the Mexican government, with the value of its publicly listed shares totaling $202 billion in 2010, representing approximately one-quarter of the company's total net worth. Emilio Lozoya Austin is the current CEO of Pemex. In February 2015, the board approved a $4.16 billion spending cut, pulling the company unregistered trademark S budget down 11.5% from the 2015 budget approved by Mexico unregistered trademark S Congress. The company also said it will delay deepwater exploration plans and cut jobs in response to weak oil prices. History. Asphalt and pitch had been worked in Mexico since the time of the Aztecs. Small quantities of oil were first refined into kerosene around 1876 near Tampico. By 1917 commercial quantities of oil were being extracted and refined by subsidiaries of the British Pearson and American Doheny companies, and had attracted the attention of the Mexican government, who then claimed all mineral rights for the state as part of its constitution. In 1938, President Lázaro Cárdenas sided with oil workers striking against foreign-owned oil companies for an increase in pay and social services. On March 18, 1938, citing Article 27 of the Constitution of 1917, President Cárdenas embarked on the state expropriation of all resources and facilities, nationalizing the United States and Anglo-Euro-Dutch operating companies, creating Pemex. He is famous in saying in his speech addressing the nation, "I ask the entire nation to furnish the necessary moral and material support to face the consequences of a decision which we, of our own free will, would neither have sought nor desired." He framed expropriation as a necessary national response to the injustice of the operations of foreign companies operating on Mexican soil. Expropriation was not outright confiscation, since the Mexican government promised to compensate companies. However, in retaliation, many foreign governments closed their markets to Mexican oil. In spite of the boycott, Pemex developed into one of the largest oil companies in the world and helped Mexico become the fifth largest oil exporter in the world. Recent developments: in 1979, Pemex's Ixtoc 1 exploratory oil well in the Bay of Campeche suffered a blowout resulting in one of the largest oil spills in history. Pemex spent $100 million to clean up the spill and avoided most compensation claims by asserting sovereign immunity as a state-run company. In 2009, the U.S. Justice Department reported that some U.S. refineries had bought millions of dollars worth of oil stolen from Mexican government pipelines. Criminals, especially drug gangs, tap remote pipelines and sometimes build their own pipelines to siphon off hundreds of millions of dollars worth of oil each year. One oil executive has been charged and has pleaded guilty to conspiracy charges. The U.S. Homeland Security Department will return $2.4 million to Mexico's tax administration, the first money seized during a binational investigation into smuggled oil that authorities expect to lead to more arrests and seizures. The president of Houston-based Ramo Petroleum is set to be sentenced in December after pleading guilty in May. 2012 explosion. On September 19, 2012, an explosion at the Pemex gas plant in Reynosa, Tamaulipas killed 30 and injured 46 people. Pemex director Juan José Suárez said that there was no evidence that it was a deliberate incident, or some kind of attack. 2013 explosion. On January 31, 2013, an explosion occurred at the administrative offices of Pemex in Mexico City. At least 37 people were killed and at least 126 were injured. The cause has not been confirmed. Local media reported that machinery exploded in the basement of an administrative center next door to the 52-story Pemex tower. 2015 fire On April 1, 2015, a fire occurred on platform Apcatán A in southern Gulf of Mexico which killed 4 workers. Current status. Taxes on Pemex revenue provide about a third of all the tax revenues collected by the Mexican government. Pemex has a debt of $42.5 billion, including $24 billion in off-balance sheet debt. The state-owned company pays out over 60% of its revenue in royalties and taxes. Mexico exports crude oil, but imports more expensive gasoline. Reform It is said that Pemex lacks the equipment, technology, and financial means to explore for new reserves in deep water or shale gas. Hence, a reform to Mexican law has been put forward by the government. In addition to a failing infrastructure, dwindling reserves have created urgency in completing some type of reform. Only 20% of Mexico has been extensively explored for further reserves, and it has been argued that Pemex will need the help of some form of foreign investment to successfully explore new reserves, including in the Gulf of Mexico. In an interview on the Oil News website in November 2005, a Pemex employee spoke anonymously of the company's inability to grow production, stating that the company and country is at Hubert's peak. The person interviewed believed export levels could not be recovered once peak had passed, as the size of current fields that have been discovered or are coming online represent a fraction of the size of the oil fields going into terminal decline. Annual production has dropped each year since 2004. Furthermore, it has been reported the 2005 to 2006 daily oil production was down by approximately 500,000 barrels per day on the previous year. Pemex averaged 3.71 MMBPD in 2006. Pemex has never produced 4 MMBPD or higher for a yearly average. Pemex has been replaced as Latin America's largest company by Petrobras, according to the latest Latin Business Chronicle ranking of Latin America's top 500 companies. To help capitalize the company, former President Vicente Fox brought forward the possibility of making shares of Pemex available to Mexican citizens and pension funds, to complement a current project-specific investment setup known as Proyectos de Inversión Diferida en el Registro del Gasto. This proposal, along with alleviating Pemex's heavy tax burden and a substantial budget increase, have met opposition in Congress. President Caldera then made clear at the beginning of his presidency that he would try his best to open up the sector to private investment. Pemex is Latin America's second-largest company measured by revenues, according to a ranking of the region's 500 largest companies by Latin Business Chronicle, only behind Brazilian oil company Petrobras. In June 2009, Pemex has asked for an extra $1.5 billion state aid to finance oil fields investments, reported Bloomberg. President Felipe Caldera is calling for change in Mexico's oil industry after output at Pemex fell at the fastest rate since 1942. His comments came after Petrobras and London-based BP said they made a giant oil find of as much as 3 billion barrels in the Gulf of Mexico southeast of Houston. According Mexican Energy Minister Georgina Kessel, Mexico may seek to emulate Brazilian oil rules that strengthened Petróleo Brasileiro S.A. as it considers regulation changes to revive the oil industry. National Hydrocarbons Commission, created in 2008 by the Mexican Congress to increase regulatory oversight, has increased scrutiny over Pemex in 2012. In January 2014 Pemex signed a cooperation agreement with the Russian oil company Lukoil focusing on oil production and field exploration as well as exchange of knowledge in the aforementioned areas, including actions for ecological preservation and environmental protection. Alleged corruption There have been various allegations of corruption within Pemex for over a decade. These range from political contributions to the Institutional Revolutionary Party, no-show jobs, various forms of fraud, embezzlement, and even under-the-table fuel sales. It has been estimated these various forms of corruption contribute to the loss of over $1 billion a year. Human and labor rights violations. Pemex has a long history of violation of human and labor rights regarding engineers, unrightfully considered to be trusted workers, who have tried to unionize since 1995 and succeeded, after several repression episodes, In doing so in 2008 and 2009, although at a high human cost, this included the death of a person who was refused medical service at one of Pemex hospitals because his son had just been sacked for belonging to this union, the Unia den Nacional de Copyright Knikos y Profesionistas. It also included forcing union members to resign to the union from their hospital beds, as happened to 3 cancer patients in 2009. Up to date, and in spite of pressure by the Mexican Congress, the International Labor Organization, the Global Compact, the Industrial Global Union and thousands of citizens all over the world, workers sacked in 2002, 2004, 2008, 2009, 2010 and 2011 haven't been all reinstated, nor has there been any reparation otherwise. Pemex has never acknowledged to these violations of human rights. See also: Petroleum industry in Mexico, San Juanico disaster. References. External links: Spanish, official site, Spanish, security sheets for the use of substances about the Pemex products, Magna, Diesel, Combustóleo, Petróleos Mexicanos company profile on Yahoo. Mexico energy reform and related infrastructure projects, Mexico's crude oil production chart, data sourced from the U.S. Department of Energy, http www.usa.org Novo 6 PDF number 19D Pemex, Challenges and Opportunities. Time for Reform? Pages 19 by Justin Dargin.